Yo, what's going on? I just wanted to get on here real quick and show you guys kind of the in-depth explanation to Casa Wick Theory because I made it super duper simple. The 3 consecutive wicks, entry at the 0, stops at the 1. They give a in-depth explanation on why exactly it works, right? So a lot of people are curious. They're asking me, how do I confirm it? How do I filter it out? That's exactly what I'm going to be doing in this video, right? So first we have the key, the diamond information, right? Insider information. There's literally a diamond next to it for a reason, because this is more than gold, right? So some terminology that we need to know beforehand is what wick theory is in itself, right? Let me zoom in a little more. What optimal time entries or OTEs are, market structure shifts, and then SMTs. All are going to be the foundation to the exact confirmation model that I'm going to be sharing with you guys on Casa Wick Theory. We're going to be running through some examples, the 2 different types of Casa Wick Theory and everything, so stay tuned for that. Definitions, right? So I'm not going to try to bore you guys. It's only, let's see how many, we have 3 definitions total. So stay with me now. Don't binge watch this. I actually take notes, and it's really simple. So what is wick theory in itself? So wick theory teaches that every single wick on a candlestick is actually a gap in price, right? Just like a fair value gap. So it's very similar in how we treat a fair value gap. We want to see the upper quadrants get respected, the lower quadrants, consequent encroachment. It's the exact same properties, but just given to what? A wick. So a wick shows where price moved but didn't trade efficiently, leaving an imbalance that the market often revisits or reacts to. In other words, wicks aren't just shadows, they're hidden gaps that reveal inefficiency, liquidity, and future drawn price, which is huge. This is kind of the foundation on Casa Wick Theory. And we have market structure shifts plus OTEs, right? So we need to dive into the 2 different types of Casa Wick Theory. The model that I'm going to be sharing with you guys. So this is an example right here. What is an OTE? An OTE is defined as the deep retracement after a market structure shift, bullish or bearish, designed to scare away the people who are on the right side of the market. Now this is huge, right? Because you could always have narrative and you could know where the market is going, but if you don't understand the fractal nature of price delivery, you're going to get eaten up, right? You're going to go through major drawdown, even get stomped out, blow up a bunch. You're going to blow up funded accounts. So just because your bias is correct overall, you need to understand the fractal delivery of price, right? That OTs are designed for a reason. OTs or pullbacks, they're designed to scare you away. So let's say, for instance, you had a bearish bias, in this case, which I did, with a market structure shift. Let me zoom in. Market structure shift right here. Lower high, lower low, take out that high, break below this low right here, market structure shift. What happens right after, right? If the change in state, this is confirming that we're gonna have a retracement with this candle right here. And then what do? To the T, what are we souping? 705 level aligns with this fair value gap. And then what happened right after? We start to distribute straight to take profit. This is a super duper clean example. But yeah, that's on the lower time frame. I believe that was the M3. Now we need to get into SMTs. Oh yeah, by the way, this is like the core of the execution for the 3 consecutive wicks, because this is typically what you'll see on the 3rd candle going into the 2nd. So 3 consecutive wicks, in the middle being the longest. The 3rd wick, you'll typically see that market structure shift, giving you that OTE entry, which this is what it looks like on the lower time frame, right? Price delivery continuum theory, and then we start to distribute significantly lower. So for SMTs, so SMT divergence is when 2 correlated, or 3 in this case, because we have the Dow Jones, YM, ES, and the NASDAQ. So yeah, like the NASDAQ and the S&P move differently at key highs or lows. If one makes a higher high while the other fails to, or one makes a lower low while the other doesn't, that divergence signals where the smart money is really positioned, protected highs and lows, right? Typically, you'll see a liquidity sweep, in other words, a rejection block, right? And we could see this was applicable today. Today is currently Tuesday, September 16th. And if you were to take a look at today's price action, on YM, we had these wicks that took out all of these relative smooth highs. We failed to do so on both assets, signaling what asset is the strongest. The asset that always takes out the higher low is the asset that you want to trade for that day, because it signals what? It signals strength. Typically, it's the NQ that'll take the higher low. There will be days where it's on YM, and there will be days where it's on ES. And that's the asset that you want to trade for that day. You want to adapt to the market conditions. But yeah, we're the SMTs at these highs, as you can see right here, and then we just tanked. Clean entries, caught shorts today. It's like, hey, why not use today? Because it was a super duper clean example, and everybody that's watching us today can, forward test or look back at today's price action and see it live in hindsight. So what's next? Theory and practice, and then we'll go through some examples. So here's the theory and practice. Got the little nerdy emoji because we're gonna get technical. And oh yeah, let me show you guys the diagram. So I made it like this on purpose because as you can see, it all is like a circle. It just all comes back to each other, right? But first, we have Casa Wick Theory. We have higher time frames. Every single time you hear me say a higher time frame, whether that be narrative or PD array, I'm looking at the 15-minute time frame or higher. This is what I classify as, my higher time frames. And if you guys are just trading Casa Wick Theory, like you guys are new to it, I'd recommend just watching the video. It's going to be linked in the description. And just trade off of the M15. Because I'm telling you, this is one of the keys to building wealth in day trading is that model, let alone. On the M15 or the H1. Right here, we souped the 0.5. And I'm telling you guys, just by looking at the wicks, the 3 consecutive wicks, you already know what's going on. We had that market structure shift. We had the OTE entry and straight to take profit, right? Happens time and time again. There are 2 types of Casa Wick Theory, right? When you see the third wick into the discount of the previous wick, that's when this model is present. That's whenever you're going to see that OTE, market structure shift entry, and that's what we're looking for. Second type is whenever we're super duper sensitive around the upper/lower quadrants. This typically indicates what? Speed and heaviness. Heaviness is huge. And then this always presents us the opportunity on the lower time frames to top and bottom tick. Now, am I going to share this on the YouTube? I'm still kind of indecisive about it. I'm still thinking about it. It's how I top and bottom tick every single day. Now, this is simply just not talked about enough because on the x-axis, we have time, and on the y-axis, we have price. As you can see, they both are correlated. One doesn't move without the other. We focus so much in hindsight on price, we completely forget the time aspects, right? So what makes time relevant to price? I'm kind of asking you guys. It is A, macros, so you guys want to make sure you guys are watching your macros. B, time arrays. Price delivery continuum theory, again with your intercorrelated time frames. Those 3 things that I just said, I'm just pushing you guys and hinting you towards the right direction here. Kind of giving you guys leeway and guidance towards the right doors. Think of it like that. But that's the importance of time. And then we have execution, right? So 1, we have higher time frame or same time frame PD arrays. Huge. 2, we have 2 consecutive wicks. We're entering on the 3rd wick. Remember, we're always entering on the 3rd wick. And if you need that confirmation, either hit the same time frame or hit the lower time frame and look for a market structure shift plus an OTE for confirmation and entry. SMTs and protected highs and lows. Again, if you guys want to enter off of, because a wick in it itself is a gap, it's an inefficiency. So you could enter off of a rejection block or a wick, right? Now, how do you differentiate the two? Let's say, for instance, you sweep liquidity, and then, like for today, right? We swept liquidity on YM, and we failed to, or the Dow Jones, and we failed to do so on ES and NQ. So that wick on YM, and I'll go back to that example later if you guys want to rewind the video and look at that same screenshot. But that same wick that swept out those relative equal highs and failed to do so on the other assets is a protected high/low. So that wick in itself is super high probability. You could enter off of CE stops 1 or 0. And then again, if you always want to wait for confirmation, you wait for that SMT to hold, and then you wait for that market structure shifts plus OTE entry. So again, the fractal nature of price delivery. So this is the H1. This sends us into all-time highs, by the way. 3 consecutive wicks. What do? We got in at the 1, targeting what? Relative equal highs. And then we had OTE retracement. Again, this wick right here, this doji, was designed to what? To get all the people that had the right sentiment of the market, that were right on side of the bullish if you knew that the market was going higher and we were trending higher, right? With a market structure shift, and then we had the OTE entry from this swing low to the swing high, right? So we give that OTE entry, and then what do? Skyrocket higher. We have some more examples. So this was on the M3, right? Caught this super duper clean Casa Wick Theory. This is fractal. That's kind of the point. Applicable in every time frame. Yes, every time frame. You could go down to the seconds, the minute, it doesn't matter. The 3 consecutive wicks, it's just the fractal nature of price delivery. So it's gonna happen on every and any time frame. But yeah, I just wanted to give you guys some more narrative around, you know, confirmation, some more confluences. Let's see. And yeah, that's all I have for that. Again, it's all like a, think of it like the infinity loop that just keeps on spinning. It's the same thing. They're just all correlated. They go back and forth. That's the correlation, right? So now we have some examples. This was very similar, but this was on the H1. Right, so what do we see? We have 3 consecutive wicks. What do? We soup the OTE to the T. The OTE of this wick, boom, straight to take profit. And all-time highs is going to be at that 4. And I'm telling you guys that it's fractal. It's genuinely fractal. This is the M2 time frame. Again, straight to take profit. Again, this is just a rejection block. This was that whole SMT. We had SMTs, right? This is the wick that swept out highs and lows. What is this? Protected. This is a protected high now. This is where all the institutions are positioning their shorts. What do we see? We give discount entry right here. And then you can imagine what this looks like on the lower time frame. This is just a market structure shift on the lower time frame. This discount entry, it's literally just a market structure shift on the lower time frame before distributing price straight to my take profit. But yeah, if you guys have any questions, feel free to reach out. Leave a comment. I always respond to all my comments. Join the Discord. I'll see you guys in the next one. Peace.